No, I'm an addict. I'm just generally an addict. My obsession was beating the game. It wasn't making loads of money.
I'm super boring in that I don't have like a big loss.
All right, so episode 1 of the Burrow with the one and only CBS. Is that how you like to be called, by the way? CBS?
Yes.
Nice
Is that how you like to be called? Is almost has like a sexual vibe to it. It's so yeah, let's stick with CBS, Shiller, whatever. Yeah, it's fine.
Mr. Shill. Okay, perfect. Well, this is technically speaking the first episode. I don't know what order the episodes are going to come out in because we're going to record a few. Obviously, we want it to be as close to time recording in case there's a bit of market alpha, which I'm probably going to try and squeeze from you. But we got the one and only Jim Talbot with us.
Hello.
Hello, sir. How are you doing?
Well, I'd been better if CBS was late, as he notoriously usually is. So he ruined my bath time, which is never.
Was there bubbles in there?
Never, yeah. Well, I've just wasted probably £3 worth of bath oils, so it's never a good, never the best way to start a podcast, I must say. But
I said to you, oh, sorry, go on.
I said to you when you first put that out and said that you were in the bath and it's like 11 o'clock in the morning, that to me like sends shivers down my spine on how terrible that would make me feel having a bath at that time. Like that would just screw with my whole body clock. As soon as I get out of that bath, I'd be like, right, it must be time for bed now.
I think that's a good segue actually into how you manage to stay so motivated and busy when you don't. I'm presuming you don't particularly need to, because it's something I personally am terrible at. As you can tell, because I'm having baths at 11:30 a.m. So, what keeps you motivated?
Staying dry, not getting into a bath. Yeah. So, in terms of like motivation, I think I always use cred as like my example, right? Because everybody in this space thinks about cred and what cred has given to the space, without this being some gushing endorsement of how wonderful I think cred is. I always look at cred as like a really good example of somebody who has like a kind of like a legacy in this space because of what he's produced and the content that he has created and the way that he has become the go-to source for things. So I've always, I've kind of always been an educator in the space, and therefore I've always looked up to cred. And from a kind of a content creation perspective, I've always said I want to have some kind of slice of legacy in this space for content creation. And people remember me for creating content and, giving something to this space. So from like a content creation perspective, I think trying to cement some sort of like legacy, some sort of history, some sort of significant importance when it comes to educational content. And then like the trading side is like 70% addiction, 30% fun. Like it probably splits like that.
Would you say you're trading more now in order to stay sharp, in order to pursue that sort of content creation side, more so than trading, being the sort of predominant thing you're doing? Sorry, I was badly worded.
No, like I'll kind of unpick, or at least I'll give my view back to that, which is, so like, I don't know, the last 2 weeks, for example, I've been trading, moderately in terms of frequency, but I've kind of had a very clear path on what I believe is kind of the play. So, kind of making sure that I think the dollar goes higher. I think that the indexes trade lower, and kind of just focusing on that as my path through trading. And I deliberately posted in the Haven to say, I'm not putting out any videos because I don't want to do analysis for the sake of analysis. Like I believe this is my process. This is what the play is. And I'm just going to follow that. I think at times, like I can just sit here and you almost like overanalyze. So then you start bringing in other outcomes, other thought process was, like what happens if price doesn't do this? What happens if it does this instead? And it's kind of like, I just kind of want to eliminate that. So I've been trying to produce more clarity in my thought process, especially when I feel as though I've got kind of groove with the market. That's been important recently.
You think you've kind of built upon a pressure upon yourself to deliver like a certain frequency of content now? Do you think, that's kind of weighing into?
Yeah, I think like sometimes like you don't need to, it's like there's only a set number of ways, you can skin a cat, basically. It's like everybody's just talking about the same shit. So, the levels and adding your voice into the kind of the endless echo of similar thought process, especially when you've got less than desirable trading conditions or price action that supports that. So yeah, trying not to like produce for the sake of producing and like analyze for the sake of analyzing. Instead, just, kind of sticking with the same process until something significant changes in which you can actually talk about something, more valuable.
Yeah. I'm interested a little bit about because earlier you mentioned legacy. I find that's actually a really interesting motivation, because it's not something I would have it makes a lot of sense, but it's not something I necessarily would have thought of. Do you have sort of like a benchmark for like how you'd measure that? Like at what point you'd be happy, or you feel like you kind of have hit that goal of sort of that, I guess legacy is the best word, but that kind of status where you're one of the key educators in the space? Is it like, or maybe if cred's that sort of benchmark, what are you weighing it against?
Yeah, so I think for me, it's like, so obviously I'm working on something at the moment, which I hope will be the product that will kind of, push me into that zone. I think a lot of people, if you would kind of just ask in general, I think a lot of people probably know me for more of an educational, rational stance on the markets.
Yeah.
Sometimes I play into like the Twitter character, arc, and like, I'm more bearish at, certain points. But typically I try and push educational, helpful, rational content. So I think a lot of people know me for that. What I would benchmark it as is similarly to Cred's content, where, a newer trader is looking for educational content and you say, go and check out Cred. Right, like that's the thing that you would say to a lot of newer traders, and essentially, I want that kind of first port of call. I want them to be, okay, CBS has this content. Go and look at that. If you're kind of taking your first steps into trading, that's where you should start out. So I want it to be the entry point, the access point. This is where you dive in, and this gives you a great foundation. And so that's kind of how I would benchmark it, is I want to be that first port of call to go to.
Would you say you've got a Twitter character? I'm curious, like how your personal, like your actual personality differs to yourself on Twitter or in your videos.
In all honesty, the majority of the time, it's just very similar to how I am in the real world. It's a very kind of similar thing. It's, relatively like sarcastic, jokey. Yeah, exactly. Like it's that classic British approach, right? As soon as you, it's just portraying the Britishness online. The only times that I tend to push it are, the certain periods of time which you can be kind of more aggressive in your kind of persona, that generates usually a very good response.
Yeah, exactly. Yeah.
So it like times I like to push it and, be more bearish. And that's when like the Dan Pena memes come out and, like I'm trying to like, push it harder on that side of things. But really, I kind of prefer being rational, because you also don't take as much shit from everybody when you're incorrect. So you have to deal with the other side of like building this like bearish character up, because when price, moves 5% higher, everyone's tagging you and fucking coming back to 3-week-old posts.
It's why we saw Capo like become so big last year, earlier this year. It's because he was like just stuck to a like his view, and then he was the guy everyone was tagging when the price would go up.
I always teeter on the brink of becoming the next Capo. I think. So I have periods where I just have to step back a little bit.
Would you say, Jim? Would you say you're bearish more often than bullish these days?
Yeah, no, not necessarily. Like it's not necessarily. I just am better personally at trading bearish price action. I just find it easier.
Well, you mean like the lack of volatility in like a bear market, or
no? I'm always more accustomed to like high participation trending markets, but I just find it really easy to trend downtrends. I kind of relish trading against people's fear responses. To be honest, it's probably quite mean, but I find it much easier.
Everyone's
I find it much easier to
celebrating.
act during people's panic as opposed to people's correlation.
Got it. Well, what about euphoria? That's a type of panic.
Euphoria is much more irrational than fear. Fear actually becomes fear is so irrational that it almost becomes rational. It kind of sounds odd, but that's how I see it. I just find it much easier to predict people's fear response, and people are much less inclined to sort of jump onto euphoria than they are step into fear, I find. So
yeah. How about you, CBS? Do you have like a preference sort of markets you trade?
Yeah. Uptrends, easy mode.
Yeah.
And that's it
for me.
So like, yeah, I just want the easy markets. I don't like to work hard for the trades. So, you know, kind of one of the things that I've very much tried to pick up on are just like the big directional trades and then kind of not relinquishing that position.
Yeah.
So like some big ones in like TradFi at the moment with things like uranium and, you know, other markets that are breaking out of like big higher time frame stuff. Like that's what I want. I just want those kind of like easy market modes and not have to kind of work too hard for the value. So those kind of big uptrending conditions are obviously the kind of the pinnacle of what I would like. There are times when I get more active and get more involved, but I guess because of the nature of my system and looking for those changes in momentum, and if it's down on the lower time frame, then it's just kind of either direction is, you know, works. But just typically speaking, just, you know, let me put my feet up, get long on something, check back in 2 months and come back to profit is ideal.
Well, how do you look out for those conditions as well? I'd be quite interested.
In terms of just like good conditions?
Yeah, like, you know, if there is, you know, a situation where you can see you can just go along and kick back, like what is it you're looking for? Maybe not necessarily that technical, or maybe it is technical, but I'd just be quite interested.
Yeah, so it is still led by purely like the technical side. I think that the one big difference is that obviously I'm trade a lot of TradFi markets.
Yeah.
So that's the big benefit I have, is that I've just got this completely uncorrelated world that I can dive into and take advantage of whatever market is choosing to essentially be in its bull run. Which is the downside to having just the crypto exposure or just the crypto focus, because you've just got that tightly correlated market. You don't get a bull run unless everything's in a bull run. You know, you get the odd alt that will give you significant value ahead of other alts. But when it comes to like, you know, TradFi stuff, you're just basically looking for the higher time frame strength. You know, you're just looking at what is making new highs on a higher time frame, like a weekly. You're looking at what's breaking out of structure on a monthly. You're looking for higher time frame divergences to play into. So like systematically, it's basically just looking for the highest time frame signs of strength as possible, and then piggybacking onto that basically.
Yeah. Is that something is this like quite a recent strategy you've been doing, and or is this like, how, I'm curious, you know, is that like, how long did it take you to develop it to this point? Because I've got a feeling, you know, you're now at a point where you've got something down, like you said, it's a bit more hands off as well. You can like kick back a little bit, but maybe in the early days were you just kind of frantically scalping on lower time frames, or?
Yep.
Yeah.
Yeah, that was it. That was it in the trenches then. That was So yeah, just like lower time frame scalping, again, looking for signs of momentum changes. And then if you kind of think about the transition that I've had towards swing trading, it's taking the same kind of rationale and reasons why I was taking the lower time frame trades, but simply expanding out the horizons to the higher time frame. And from a technical perspective, there's like simplicity to that, because you're just taking the same stuff but not in the higher time frame. Psychologically, there's a major difference in doing that. Like from anticipating, you know, when you're scalping on lower time frame, you're using like tick charts, you're taking advantage of, you know, 50-point moves in the Dow. Then when you're suddenly transferring that into higher time frame and you're underwater for a week, and, you know, I'm used to historically being in position, and that scalp basically has to move into profit immediately.
Yeah.
Otherwise, there's usually an issue.
Yeah.
Right. Whereas now when you're swing trading, it's like, okay, well, I've got the signal, but I may not get the impulse for a week. So I've suddenly got to.
How do you find that psychologically? Because personally, for me, I'd find that Like that's really hard for me, and it's why, as a very amateur trader, I tend to favor low time frame because it's immediate. I get that response to, immediate call to response. Whereas swing trading is like I'll just start doubting myself like within an hour.
Yeah, the big thing that I always say, and it's like one of the kind of like unwritten rules of divergences. So if we take like a divergence as an example, you play that down on a 1 minute chart, on a tick chart, on a 5 minute chart, whatever on the lower time frames, you've got like a rough guide of when that impulse should happen, right? You've got like this rough time kind of bracket in which you should be seeing some sort of move that is confluent with your positioning. When it comes to the higher time frame, you always think about things like divergences that you may not have had the impulse yet, you may not have had the move yet. Awareness that you're operating on a higher time frame, so obviously the parameters are shifted significantly in terms of when you're looking for a play out, but you should never be closing a position if the original signal is still present. So that's the way I always think about it, is like, I'm operating now on the daily time frame. Who am I to say when the market should move? However, I still have the signal that says I should be in this position. So I'm not wrong. I haven't been invalidated, but I don't put any kind of weight on, I think the market should move in the next 3 hours. Otherwise, I'm incorrect. If the signal's there, I stay in the position.
So, when it comes to testing swing versus, because the reason it's easier, I think, to build a profitable sort of system that you're confident in on low time frame is you get that instant response and you get the forward testing results that you can then quantify. Would you recommend? Do you think back testing is good for swing trading strategies? Because it's still something I struggle with. Is that I'm so used to an immediate response based on my preference of trading low time frames that I just get sick of waiting days personally. I just haven't got. I still haven't got it in me really, unless I'm really. I have to have extremely high conviction in an idea for me to hold a trade for a long
just
time.
get in the bath and forget about it.
Yeah, 3-day bath, and then you come back and everything will be great.
A shriveled mess.
Yeah, exactly. Yeah. You just crawl your way back to the PC. You just see you green. So like the back testing is really important. And usually with swing trading, the back testing process is a lot easier because there's fewer signals to take. Typically speaking, there'll be fewer instances of when your system would perfectly align to give you a signal. And I always say, and you probably touch on it a little bit there, and you talk about kind of like lack of patience and, kind of getting bored. The difficult thing with swing trading is usually the psychology attached to it. Because the majority of people can make the decisions, the signals are there. It's like, how do I execute that? How do I act on it? How do I stay in position? How do I not get scared off 3 days in? How do I not get bored? How do I not overtrade? How do I not flip bias again halfway through? Like it's all of that kind of supports it. So the back testing for signals is great. And usually people can develop something that gives them signals, and then you move into the very difficult part, which is actioning, making sure you stick with a position, don't get bullied out, etc.
Well, how do you deal with that? Is it like, because I find that quite an emotional thing. Like, you don't strike me as an emotional trader. I'm wondering what's going on behind the scenes though. Like, are you battling with these, emotions sometimes?
Are you typically sizing smaller or larger on the swings versus the scalps?
So I'll answer kind of the emotional side and sticking with it, and just reiterate again the logic of you have to be as numb as possible to like additional market factors. So let's say, for example, you're playing on one of your divergences and you start to see a move, but then the move kind of goes down a little bit. Let's say the next day it kind of retraces some of the move that you originally captured. That's kind of like a typical point that people then tend to do like a process of reanalysis. So they've got their original signal, might be on the daily time frame. They then get a period of 6 hours in which it retraces some of that move, and they do a process of reanalysis. And the higher time frame signal is still there, it's still correct, and goes back to that point about if the signal is still there, you shouldn't be adjusting that position. But we tend to do then reanalysis on like the lower time frame action that that kind of gives us concern and worry. And as traders, we always look for reasons why we're not going to be successful and why we should change to the other side of the trade. So really having conviction in the underlying thought process and the signal and the reason you're in the trade, and then using some discipline to then stay in position. The only time it changes is if your higher time frame signal has changed as a result of what the lower time frame has done. And the majority of cases, that's not going to happen. Then to Jim's point, which is kind of about risk. So the risk is always to do then with the quality of the setup. Typically, my higher time frame setups are better quality, and I prefer to size up for swing trades. I'm usually granted a little bit more in terms of my tolerance for stop loss distance, etc. So I kind of like to set myself up with a decent chunk of risk on high quality swing setups. But at the same time, if I'm trading lower time frame and I get a similar set of high quality confluent factors, then I'll slide the risk up again. So really just like quality, regardless of time frame. But when it comes to swing trading, I think there's always the thought of like wanting to get paid big. Like, see, everybody has those dreams of like catching the bottom on something and having used huge size.
Yeah.
And then suddenly you're in this like ultra comfy, godlike position of just watching P&L go crazy and you're sitting there for 3 months doing nothing. They're the dream swing setups. And that's what everybody looks to achieve. But again, kind of some realism with what's going on is important there.
See, this is what's always interesting to me, because generally, I'm a lower win rate trader on the swings than I am the low time frames, you see. So I have to change my position sizing and risk tolerance. So so it's interesting, really. So are you saying you're much higher win rate on the swings than you are the low time frame?
Yeah, like lower time frame, I've had those runs. Some bot liked a tweet from mine previously the other day, and it made me go back in and recheck it. It was a time that I ran up like a 10K account to 90K in 7 days, and rate was 27%.
Yeah. That's hilarious.
So I was like, it was just garbage. And so like lower time frame, the process that I use for lower time frame is I am either timing this perfectly for impulse or I'm out. And like that's the plan. So typically lower time frame has a far lower win rate. Higher time frame, as I said, I tend to give myself the breathing room, whether that be through options plays that have months until expiry, whether that be slightly wider stop losses and then management of risk there. But yeah, lower time frame tends to, for me, to be like I am capturing perfect impulse moment, or get me out of the position and I'll try again in 2 hours time.
Mm-hmm. How much are you trading these days? Like if you were to like give it a prediction in a week, how many days of the week are you actually sitting there managing a position?
Oh, 1 or 2 maybe.
Yeah.
Like certain days I like to kind of be a bit more active. Like today I've got a free day, so I'm going to be a little bit more active in terms of, taking positions, looking for things. But normally, now not a lot. I tend to spend a lot of time still at the charts, like looking for opportunity, looking for things, researching, like watching if things are moving into good higher time frame positions for me. A lot of my swing trading stuff is now done via options, because again, it's like risk up front, throw it in there, let the position develop, don't get chased out, don't get stopped out. So I tend to do a lot of it via that. So if I have strong conviction, it's just okay, buy a ton of calls, buy a ton of puts, see you in 3 months in expiry, and that tends to be it. But like active trading
has always been that way. Like in terms of your frequency, maybe when you were coming up into the trading world, were you kind of hunting a lot more positions each day, or have you always taken this approach?
Oh no, yeah, I was a very, very high frequency trader when it comes to like executing. Like when I was trading like lower time frame indexes, and when I scalped ETH, I was in and out of multiple positions per day. Like
how
I was
long
looking.
ago was this?
3 years.
Oh wow, yeah, okay. Yeah.
So 2020, I was pretty much just doing the ETH thing for a year.
Was it working, or have you learned some valuable lessons?
No, like it works. There was just, like obviously there's an old thread of mine which is talking about kind of my scalping approach, and was kind of a very first-hand account of what I do. And as I said, I think it was about 2020.
Yeah.
And I used to refer to having like a daily total that I look to achieve when I was scalping in order to give me an out for the day. It's like I can close the office door and I can walk out and feel as though I've completed my job and then relax. Because otherwise you just get hooked like 24/7, just being like, there's always value, there's always something. I like the financial situation changed. I think back then I was looking at around $250 a day was what I was looking to take. And if I achieved that, then I would step away from the market. And obviously, since that period of time, financially, things have changed dramatically for me. So it means that I don't have to operate at that level now.
Because I've heard mixed things. Like a lot of people don't like that psychology. I know Jim literally turns off his P&L. Like a lot of people don't like this psychology where they're looking like, I have to hit X number. I'm curious if like how that worked for you. Like, was it successful? Like trying to hit that goal every day?
Yeah, I think as long as you are aware of what the negative implications of that are, like, so if you're at $245 for the day, right, that's $250. Like you're there. Right. So you don't have to, it's not like you have to force and push buttons to hit the extra $5 to get you over your threshold. And it's also things like understanding that even though you've got a target, not all days are you going to hit your target. Right. So it's like you've got to not be in a position where you force yourself to do things that are contrary to the system or the market conditions in order to try and hit this target. So as long as you aren't, completely blocking out the fact that, you've got to hit this target and that's it and nothing else matters, then I think you just, you use it as the balance. And for me, it used to be a measure of like success and, like I said, stepping away, because I also found that, if I hit a great trade early on in a session and just nailed it, just did, right, 2 trades in, done, profit secured, finished. Yeah, that's fine. Like, stop. Yeah, it's like, enjoy it, right? Step away, stop. The problem with scalping is that it's so addictive in terms of there's always potential value to be had. Like there's always a setup. There's always something can happen at a moment's notice that has the potential to then generate an opportunity for you. So I always find that the longer you're at a PC, the more likely you are to make the mistakes. And so, having a point of just stepping away and being like, okay, that's a success. I tick that off. It's a win today. And we'll come back tomorrow and we'll see how things look.
Well, yeah, I guess this is a question for both of you as men of golf, but has hobbies and stuff like that, you feel like that has an impact on your trading? Like having something to, I'm not saying you're playing golf every day, but, I'd be interested in sort of like how the mental health aspect.
Well, I think trading. I wanted to ask, I actually think golf's one of the closest sort of like sports to trading that I've ever found as far as process goes.
Why is that? Because you're just terrible for a really long time?
No, because it's repetitive. You're working on once it's repetitive. There's a steep. There's like a real steep learning curve, and then you get to a point where you're working on minutia for tiny improvements, and it's a very mental game. You have your swing thought. You have your same setup, so it's very structured in the sense of like trading. So
and the swings in both of them.
Yes, true. Yeah, true. And scalping if you're me. Yeah, it's So
patch up the greens.
Yeah, exactly. Yeah. When I'm the greenskeeper is just screaming at me as I'm taking another 6-foot divot from a beautiful course. Like I've been, the hobby side I think is always really important, because it's also really important to kind of like take a break, and the over analysis aspect again is important. There's a fine line between concentration and addiction in terms of when you're looking at the charts. Like you can concentrate for a good period of time and be, very mentally aware of what you're looking for and the setups and planning. And then there comes a point where you're essentially just like a mindless, addicted zombie staring at the charts, doing nothing productive. So like there's a really good balance there. And I always used to say to people, like, play video games. Like a lot of people, I'm not gonna, like, I'll generalize a lot here, but like a lot of us are video game players, former video game players, former poker players. Like we all come from that sort of like generation of of entertainment. So if you're there and you're just kind of like mindlessly staring at charts and doing nothing productive, like just give your mind a break. Just like load up a video game on the screen next to you, play for a bit, keep an eye on the chart, move back, like do something that's like a little bit kind of takes away from just the staring at a chart. Because you lose so much time to this process. Like you really do lose, people just suddenly sit down at the end of a night, stare at a screen, stare at charts, and they look at the clock the next time and 4 hours has passed.
Yeah.
And like they've done nothing apart from, so having those regular breaks, whatever your hobby is, I always, as I said, I just used to say, if you do want to sit at a PC, then just do something else with the time as well.
Just don't play CBS at Worms, because it's You'd rather stare at the chart, honestly.
I'm a destroyer. Yeah.
No, you're the luckiest
menace. A menace.
Shit I've ever seen in my life.
An esports pro, some would say. Yeah.
Do you find, like, because I mean, like, I always hear these like pretty similar opinions from a lot of traders, who have made it. Like these guys are big on CT. Everyone looks up to them as top of their game, what everyone's aspiring to be. And then a lot of them tend to have something similar as well when they started. All these lessons they're preaching about, stepping away, don't spend all day doing all this stuff. They actually did themselves when they were starting. Like they were sitting there all day, like you said, scalping in the trenches. Yeah. Do you think that is actually still a really important part? Like, it's all good and well to recommend someone steps away, but do you think if someone's really trying to get into trading, maybe in their first year, their first 2 years, do you think it's actually a necessary thing for them to really sink in there? I think people have this idea where they can just if they dedicated 18 hours a day to learning charts and patterns or whatever it might be, they can get to where they want to be. Or do you think it's a good approach from the start to treat it more as maybe like a hobby, and you don't spend your whole day on it?
Yeah, that's a really well phrased question, and especially like attacking the kind of the kind of preach of what the kind of the ideal approach is. I think Altcoin Psycho tweeted the other day about something about like when you're kind of on the journey. I'll paraphrase, like when you're on your journey to trading, it's like the brag is how much you trade, and then when you've made it, like the brag is how little you trade.
Exactly. How many baths you have before lunch?
Yeah, exactly. Yeah. How many pre-11 a.m. baths you've had? But like I think it's a really important thing, and again, I'm very realistic when it comes to the advice that I try and give, because I went through all of the processes that I speak about, all of the psychology. I experienced it all. Like you need time in front of the charts. Whatever that time looks like for you, you need time in front of the charts, and everybody was in the same position. Anybody that was, trying to make it big, 2018, 19, etc., like they put time in front of the charts, and they were addicted, and they spent way too long in front of the charts, and it was unhealthy, and it stood them in good stead, right? The vast majority of people were then in a good position come the bull run, just come their absorption of knowledge during that period of time, their system, whatever it might be. So there is no replacement for amount of time at charts. But there comes a kind of like a healthy balance you have to have, or at least a self-awareness of, is it impacting other aspects of your life? You know, are you now neglecting health, family, whatever it might be, in pursuit of this? So there has to be that element, but at the same time, you can't replace chart time. You can't replace like the educational process, the path. You need screen time and you need chart time.
Well, on that note of balance, like, would you say there's an argument? And again, this is a question for both of you as men of trading. Would you say there's an argument where spending time on those other things like family you mentioned will actually positively impact your trading? Like, even though you're spending less time looking at the charts, maybe mental health or, you know, not being miserable will actually have a better outcome on your trading ability? Or do you just say 100% degen, lock everyone out, ruin all relationships?
I think my take on, like, I think an important aspect is actually figuring out who you are as a person and what makes you tick. Because I have I kind of have like an on-off switch. I have no middle ground, generally, just how my brain's wired. So I'm either full-on obsessed or not interested at all.
Yeah, me and CBS were literally speaking about this before the call with ourselves as well. Yeah,
so for me, I have to do like blocks of intense obsessive trading, and then the off periods are almost as intense and obsessive like levels of laziness to counter the like real intense periods. Because there's periods 2020, 2019 where I was sleeping on a futon in my office with, you know, my screens running, and I was like having
SPF
naps
style
in between trades. Yeah, it was just disgusting.
Was it a publicity stunt as well? Or?
Yeah, I'm actually insolvent, and I've spent all.
I knew it.
Yeah. So I think it's important to figure out what works for you. Like, what works for me personally nowadays is I actually obsess over the structure of my day-to-day routine with regards to meals, exercise, and that kind of thing. And I think because I've put that time in early into my trading, I can approach the markets in a much more discretionary way now, and I can kind of enjoy it a bit more passively. And I get my so for me, it's about like what's the this is gonna be a cut on the edit. We'll clap.
No, keep it in. We're keeping it in.
I can never remember the thing where your brain like produces such and such. Is it serotonin?
Yeah, so that's one of them. Dopamine.
Dopamine, that's the one. Okay. It takes a lot for me to get any sort of dopamine hit. So I have to do stuff obsessively. So I've just lost what I was saying.
Maybe we'll bring it over to CBS then.
As long as you full stop it there, that's a fine description. Yeah, you kind of rounded off nicely. So, two things. Number one, the kind of thought process about mental health, family, making sure relationships are kind of good. Yes, very important. The mental health side of things cannot be emphasized enough. This space is very lonely. It is, very much you on your own for long periods of time. And so therefore, you need to have that, other side to things, at least, if you've got some sort of social circle, whether that be online or in person, making sure that you are engaging in that. And I'm also a big believer in, and again, this is like the golf and trading podcast, but like I'm a big believer in that your mind needs time for things to sink in and absorb. So I've always found this, especially, as I said, with the golf side as well. I'm a very recent golfer, 3 months in. I've been playing 5 times a week. I've been getting lessons weekly. And usually my biggest advancements in my golfing come after a break. Like after I spend 2 or 3 days with not doing anything, it's almost as though that information has sunk in. My mind's had time to process it, and I'm better when I have a break. And the same goes with trading. And it is something that, again, I'll link into kind of the dopamine side and the mental side. It's draining, right? So Jim's process of addicted cycles with lack of any motivation cycles are actually very common, because the process of trading and the process of all of that information that you are processing consistently is mentally draining. And lots of people get to the end of the day after they've looked at charts or traded and they're tired. And it's like, well, I haven't done anything today, so why am I so tired? But actually, the mental exhaustion and drain of that constant processing and analysis is huge. So having the breaks away, and again, it goes some way to me being Jim's therapist, explaining why Jim would go on a cycle of heavy engagement, heavy kind of addiction to trading, to suddenly, fuck this, I just want to sit on the sofa all day and not do anything. It is exhausting. So you will burn out if you don't take those breaks.
I personally have to, like, I think the hardest part, but the important part for me is acknowledging the point at which I need to step away. And then it's, I know myself, that I know I'm an addict. I'm just generally an addict. So my addiction now is health. Yeah. Because I need that period. I need that period of sustenance and benefiting myself. So my addiction now is gym. It's calorie intake, it's counting macros. It's really it's as nerdy and obsessive as trading, but it's benefiting me physically and mentally.
It's funny you mentioned gym.
My next, I'll be ready soon for my next bout of trading, because I've filled myself.
Well, it's funny you mentioned gym, because I was literally, when you were talking about taking a break, it literally made me think of like powerlifters doing their deload. Like the gym I used to go to was a powerlifting gym, and I'm not a powerlifter myself. I chat to these guys all the time, and there's like such a science behind taking time off, and you come back especially before a competition. Yeah, they don't train that week before a competition. Like, you'd think you'd want to get as many hours in as possible, but if you want to be your strongest when you're competing, you've got to take a week off at least, doing literally nothing. And then you come back and then your performance is significantly better. So that's quite an interesting parallel to trading. I've not even thought about. But I think that's one of those things, like, it's easy to say, but then people, I'm sure there's people listening to this, like, I want to put that time in to become better. Like, how much time should I be taking off? Like, maybe I'm not even at that point where I should be deloading yet, because a deload is usually followed by significant load. And maybe there's a lot of people here, like I'd say myself included, when I was trying to trade before, and now I'm with Woo, obviously, where I was like, oh, maybe I'm not putting enough time in and actually just getting better. I mean, I guess, like, if you were to give people some alpha, again, for both of you, what would when you said you had to put that time into looking at the charts, like, how would that look practically? Like, is that literally just staring at charts, trying to draw lines? Yeah,
I personally think the only way you make it as a trader is if it starts as an obsession. My obsession was beating the game. It wasn't making loads of money. Yeah, it was why am I losing? Why am I losing? How can I beat this game? It's no different.
It's the competitiveness. It's like,
the money is a byproduct of beating the game.
Yeah,
and the game's the only thing that I care about. So yeah, if you're not obsessed and you're doing it because you're trying to break free from, normalcy and 9 to 5 and stuff, I think it's the wrong goal. Yeah, you got to be obsessed and absolutely. I love it as much as I love golf, and it's the greatest sport in the world is like trading for me.
Yeah, I love that way of looking at it, like a competition. Like, I'm losing. Why am I losing? Let me start winning. I think that was like one of the, like, obviously we didn't come into this with pre-written questions, but this leads really well into something we wanted to talk about, which is like dealing with losses, because it goes without saying there's kind of an underappreciation for how much the biggest names in the space lose, because obviously on Twitter, people only share their winners, and there's some traders who are good at showing the reality of, like you said, that 10K to 90K challenge where the hit rate was 27%. Like, that is something people don't understand. So, I mean, like, I guess, like, do you remember your first big loss? Do you remember how you dealt with it? Or, how are you dealing with losses nowadays?
Yeah, I said the other day I was chatting on a podcast and they asked about, like, biggest loss, because people were interested in that. And I said, I'm super boring and that I don't have, like, a big loss horror
even in the
tale.
early days?
Yeah, like, there's no like significant loss where, it kind of like wiped me out. And, I've had multiple periods of sustained loss, right? Like where I just, lose consistently and I can't seem to catch a break. But like, there's no like single loss point. And the way that I always describe the kind of the loss process is that there's like this sliding scale of loss. So as traders, the first thing that we are told when you become or interested in trading is 80% of people lose money when trading. Right. It's the first thing that you're told. All brokers that you sign up with, there's a big warning message that says, 80% of retail participants lose money when trading. And the first thing that we do is we ignore that. Right? So the first thing that everybody does as a newer trader is just ignores that, and they're like, "Well, not me, right? 20%. Like, not me. Exactly. Yeah. I'm the exception here, right? So the first thing we do is we ignore it. Then when we start losing, right, we like beat ourselves up about it, because then we start doing the comparisons to Twitter, where the mindset you went in with, which is I'm not going to lose, and the unrealistic expectations of social media, which people only win, you're then in a position where you're super beat up about losses. And then you then enter this period of like being really down, you're shit at trading, you always lose, right? And so like that psychology shifts very quickly. This scale of loss is kind of really important. There's a balance where on one side there's like acceptance that loss happens in trading and that people take losing trades and people regularly take losing trades, but it doesn't stop them being a profitable trader overall. And it's about how you deal with your losses, right? And this is a little bit kind of like to Jim's point about obsession. So you've got acceptance of loss and not giving a shit and carrying on as you are anyway.
The 5 stages of grief.
Yeah, exactly. And you've got acceptance of loss, which is doing something about it, right? So lots of people, they tend to take trades, lose trades, and just forget about it, move on to the next one. There comes a point where you have to say, okay, well, why am I losing trades? Right. So unpicking what is going on in the process to learn from it. So like there's lazy losing where you just say, I'm a trader, traders lose, on to the next one, let's move on. And there comes a point where you say, okay, I'm losing regularly. What is the issue? Market conditions incorrect, system incorrect. What is it that means I'm losing money at this particular period of time? And when you get to that point of acceptance of loss and productively looking to change it, is kind of the best position you'll be in. You're past the lazy phase. You're past the phase of like, oh, CBS posted a bullish chart and I longed it. It's his fault I was stopped out, right? When it spiraled down.
I agree.
Like you get past all of that. Yeah, there's many people who would. So like that's where you need to be. Loss is a problem. I know that I'm going to lose sometimes, but if I'm losing regularly, what's going on? Like, what's the reason?
Do you journal to keep track of these things?
Used to.
Yeah.
Don't as much anymore.
Would you say that was a big part of you getting to where you are, was journaling? Or
100%. Yeah, like 100%. Make a Discord server, make a private Discord server, log all of your trades in there. Discord's so good because you can just copy and paste TradingView links straight in.
Yeah, nice.
You've got like full visuals, you've got write-ups, you can separate into separate channels, BTC trades, ETH trades, alt trades, separate everything. But journaling, it's certainly during the early days because people got no fucking reference.
It's so underutilized. And I think the thing that's underutilized is the importance of how you were and feeling and engaging with that trade, as opposed to just documenting the technical side of it, because that's generally where my losses come in, is based on a reflection of myself. I might be tired on the day. I might have had alcohol at the weekends. I might have had fucking heavy carbs, which maybe like just be sluggish and shit like that. And I think like just to go on from what CBS was saying, one of the importances for me is not necessarily about losses and win. Like for me, the importance was like there's bad losses and good losses, and there's good wins and bad wins. And I think that differentiating factor was one of the most important things for me in overcoming losing. Is like, is it a good loss or a bad loss? Because if it's a good loss, then you just mark it down to, the market decided otherwise. But you can have a good loss in the sense of you interacted with a good level, the signal was strong, you managed your risk, and it didn't go according to plan. That's a good loss. Whereas a bad loss is you took a trade in no man's land. There was no signal. You just went on gut feeling and you took a loss. And that can happen with winning as well, especially in a bull market where everyone's a genius. You can take longs with much less signal and be right, but actually it's a bad win. It's not a good trade.
I want to hop in as well, just where Jim said like the good loss, just because I think like a really good example of something like a good loss, just to kind of quantify it for everybody listening, is like, let's say for example you choose to long something on like the second touch of support, right? Like that's a perfectly acceptable trade. You got a nice uptrending market, you've hit support a couple of times, you choose to take a long, right? And unfortunately this time the support fails, right? That's still absolutely a fine signal in terms of, simplifying it, right? There may be other factors, but simplifying it, that's an example of a good long you would take, and therefore like a good loss, right? So if you lose based on that, fine. You took the right signal. Unfortunately, this time the support failed, right? And it stopped you out. The problem that you have a lot of the time when people try and actively avoid loss is they'll do things like not long support, because what they'll do is they'll say, well, what happens if it breaks down? What happens if the support doesn't hold this time? And that's when you end up in a situation where you're unwilling to accept a good loss. And usually in those instances where you sit there and you think, you know what, I'm not going to do it. I've got a feeling about it this time. This support's not going to hold. And then suddenly the market does plus 10%. From that support level,
and avoiding losses, avoiding winning.
yeah, of course.
So and I can tell you, like, guaranteed, like, as long as you can determine a good trade, so as long as you determine what support is and you long it, you can back test it, and the likelihood is that system is going to be profitable over the long run statistically. So as long as you execute correctly and determine good trades. Yep. As long as you're determining good trades, the losses don't matter. Basically.
You have to be comfy with losing, because like I said, that classic one, you and ah over doing something, and the umming and ahhing is just because you don't want to lose. Like otherwise, if you just looked at it and you had no worries about losing, you would just longer support, for example. Like in an uptrending market, you would just longer support. The problem happens is that classic thing of what, a lot of traders say is, people wait for a level to be hit. And then when it is, they don't want to take the trade.
Yeah.
Like something happens and you suddenly don't want to take a trade. You were posting on Twitter for 2 weeks about like when BTC hits this level, I'm going to long it. And then it gets there, but it did so in a really aggressive, red candle. And you're like, I don't want to long that now. It looks really bad. Actually, I'm bearish here. It's going to go lower, right? Like, that's the classic flip. So acceptance of loss, comfortable with loss, good losses are all important to ensure that you can win, and take great trades as a result.
Well, since we're coming up on the hour, I feel like it'd be nice to maybe close this off with some like alpha extraction. Not necessarily anything not like entry, TP, SL, and leverage, but
good luck.
But I guess first off, because we've spoken a lot about becoming a better trader, that seemed to be where a lot of the conversation took us. So, I mean, you mentioned cred before, but what's probably and also your up and coming products. But what might be, in your opinion, like the best free or even paid resource for people here who are trying to put that time and look at the charts, develop their system, whatever it might be?
Yeah, up and coming product. That's it. There we go. We're the legacy maker. Yeah, the legacy maker. So
that's what we should call it.
Yeah. Okay, so I will do a little bit of self-marketing in my answer to this, kind of describing it, but it does go some way to describing the answer. So what I think is very important is having a strong foundational base, and where and it kind of is really plucking at several of the themes that we've just naturally covered during the discussions today. I think if you look at things like the quality of Twitter in 2023 in comparison to where it was in 2019, there's a big difference in what you can extract from there. So it's harder to find good quality kind of resources and educational structure and, kind of establishing a good foundational base for a lot of people now. And especially in this space, you have to kind of do a lot of work to pull together the best examples of forming something that is like a solid foundation. So the product will be establishing the best kind of foundational base that you can have before then moving on to build on top of that, right? Nice. So strong foundations, build on top of it. And the building on top of it is what it looks like for you. But when it comes to like, newer traders in the space and like moving into this and being the better trader you can, I think like ensuring that the foundations are established is very important, because if something is wrong, again, we'll bring the golf element in, right? If something is wrong with your swing, if something is wrong with your stance, if something's wrong with your grip, they're all things that are going to affect your golf game further down the line as well. So making sure that you are as well established when you begin is very important. And then also, I'll absolutely what Jim says, which is you need to obsess. There is no room for somebody who looks at a chart occasionally and thinks they're going to be the next Michael Burry, right? Like there is no room for that person. There needs to be a deeper level of understanding and commitment to what is one of the most challenging spaces in the world. You're not just going to waltz in there and pretend you know everything and start making money. There needs to be a level of appreciation and respect for the area that you're moving into, and what that entails.
Yeah, people always say respect the market. I think it's funny because people don't. I think maybe it was a product of the bull run and easy mode where the other side of your trade truly was very unsophisticated. But I think people think that it's not that hard to become a profitable trader, but in reality, you're having to beat the market. And you can imagine if there's anything that's going to be competitive, we spoke about esports and all these things. Like that is truly competitive. Like you are genuinely competing.
I think you have to beat yourself. I think that's the biggest challenge for me is you have to be introspective. You have to self-reflect. You have to have a degree of critical thinking. And it's not necessarily, but the market's kind of a mirror of yourself, in my opinion. And it's about actually beating yourself and becoming more aware of your own triggers and responses to the thing you're interacting with. That's my take.
Yeah, I think that's a really good view on it, because again, a lot of the battles are the internal ones, and I think if you stop and think about who is operating in these markets, like we kind of get lost whenever we're shit posting on Twitter and doing all that sort of stuff. You kind of lose perspective. Like you have some of the most intelligent people and some of the most advanced bots in this space making money, right? So like you are up against incredibly difficult competition. Now at times it feels as though you're trading against toddlers, right? And other times it feels as though you're trading against those super geniuses and, super AI and everything else, right? But like the space is difficult. It is challenging. And, as Jim said, there is a level that comes with your own battles. And then there's a level that comes with the market. It's like a twofold process. You've got yourself and you've got the market, and both need to be, given the appropriate amount of, time and thought process to overcome.
Love it. Awesome. Perfect. And I think
really, can we end on one question? Because we had an idea of asking the same question to every guest, because it's quite an interesting question.
Go on.
Sorry to go. So what does success look like to you, CBS?
Legacy.
Yeah. So I think, to me that takes kind of, I guess, different forms depending on how I would answer the question. From a trading perspective, it is making money, and I won't beat around the bush with that. Like it is financially driven. So from a trading perspective, I want to make the best trading decisions that I can possibly make in order to financially benefit from that. I think from a content perspective and my involvement in the space, it is creating something that will, pave the way for future traders to be successful. And then from like a personal perspective, I am a family man, and it is very much about, what the future for my family looks like as a result of both of those aforementioned things, right? It's, what it looks like from my trading decisions and what it looks like from my content creation. And like I said, I think, of all the things, that last one is the most important to me. So success kind of takes many forms depending on the area. That's what it looks like.
Do you have is there a point on the financial side you'd be satisfied? Is it like generational wealth for your grandkids, or is it like, do you have an idea when you'd be actually satisfied?
Yeah, it's that the satisfaction one is difficult, and that's exemplified whenever people ask me what I do. Because, when I meet people and they say, oh, what do you do? Depending on the mood that I'm in and what mindset I'm in, I always tell them different things. I'm always like, I'm a trader, I'm an investor, I'm, I kind of like mix it up depending on how I'm feeling and how, kind of motivated I am towards the market and making more money. When it comes to like that financial side and what that looks like, I think the nature of always wanting to do more with money is too strong. Like, regardless of what I had, I think the potential to do more consistently is important. So yeah, I've always been like very much, I don't think I'll ever get to a point where I would just say, yeah, you know what, enough's enough.
Yeah.
Like, I think I would always still have to do something. The game is too addicting and too enticing to just step away. And even if it's just, sensible money management now and, long-term investment horizons, and that's fine, but I still think I'm going to be looking at charts and actively participating. So
interesting.
Do you mind if I just ask a quick, I just wondered, like, how hard was it to adapt? When you obviously have a family, was it difficult to sort of, adapt to risk, managing risk and stuff? Was there any sort of difficulties where that's concerned, because now you're obviously providing for someone other than yourself?
So that's probably kind of a good point. I was fortunate, not fortunate, I was in a good position when my son was born. So that was still kind of earlier days in terms of my kind of like finances when it came to trading. So the early days, yes, absolutely. There was always kind of like one eye on, making sure that I'm not falling into those psychological pitfalls of risking everything on a 1 minute ETH divergence.
Yeah, tied to stop losses.
Yeah, exactly. Yeah, it's just like everything's gone. So yeah, that was an important kind of moment. But then I've been lucky in that, financially things grew as I had children. So I kind of had like a hand in hand kind of process where the financial side became less of a worry, and I was having children. So I was benefited in kind of that. That's the luck aspect. The market gave what it gave during that bull run period, and I was positioned as I was positioned, and things turned out the way they did. I've kind of been lucky that I haven't had to have as many kind of deeper thoughts about like the financial implications of fucking up trades and decision making and investments.
Awesome. All right.
Awesome.
I think that's a good way to
I think that was a great way to close it out. Okay, well, episode 1 done and dusted. Thank you again, Mr. CVS, for joining us, for breaking our cherry.
Might have to get back in the bath now.
Yeah,
it's still running.
Can tell. Yeah, you're looking a bit dry now, and you need some moisture, bubble bath.
Yeah, a bit scaly.
You've been out too long. Yeah.
Okay, awesome. Well, thank you also to everyone who watched this or listened even to this episode. We should have more good stuff coming, more great guests. So yeah, thanks again.